Hello everyone, Max Neese here at Journey Financial, and today we're going to be giving a little mid-year market update. So here we are in July, and although the headlines might be concerning or scary, the market's actually been pretty resilient this year. As of today, July 21st, the S&P 500 is up almost 10%, and the technology-driven NASDAQ is up almost 11%. So overall, it's been a pretty good year thus far. And there's really about three themes I would identify of why the market's kind of pulled forward to this point. So the first would be AI, artificial intelligence. Artificial intelligence has kind of been the dominating growth story of the market so far. There's been about $700 billion of AI CapEx, capital expenditure spending from large technology companies. And all that money is flowing through the economy to companies like chip makers, data center builders, grid infrastructure. And so there's a lot of money that is growing corporate earnings. So that kind of leads into the second theme, which is corporate earnings. So in the first quarter, the market was expected to grow about 13% year over year, but it actually doubled. It came in at about 26% year over year growth. So the market obviously really liked that and propelled the market forward. Here we are coming up into second quarter earnings, and the market's expected to have about 25% earnings growth year over year. So earnings growth has been the driving story and really is one of the big factors of what's propelled this market forward. And the third is the economy. And so the recession fears have kind of really, for the most part, stayed away. Unemployment's rate remained relatively low. We're at around 4.2, 4.3%. Consumer spending has remained strong as well too. So we've kind of skated by some of those early recession fears that some were predicting. So going into the back half of the year and into 2027, there are still some challenges that are out there. First would be inflation. Inflation has remained relatively stubborn, and we're still far above the Fed target of around 2%. So we would still like to see that inflation number tick down to around 2%, or preferably maybe even lower. And with that, interest rates are still a little bit high. If you're going out and trying to finance a home or another loan, we're seeing interest rates that are much higher than previously we've had in years past. So those are kind of the big themes. There's also some geopolitical risk as well there too, with the Iran conflict and driving oil prices. So those are some things we're monitoring going into the back half of the year, and then certainly into 2027 as well. So until next time, this is Max Neese.